What's going on, guys? We're back again with another trade breakdown. I'm going to go over two trades that I took today on October 1st, the start of the new month, the start of the new quarter. And this is going to clear up a lot of the confusion because I did see a lot of you guys try and go short today. And I took a long for the first trade, which ended up being a loss. And then I saw people trying to take a short that I took a long off of. This is going to confirm and clear up a lot of the confusion that you guys have. And I'm going to go over top-down analysis and describe how to properly react after you lose a trade. So that's like adjustments based off of the higher time frame, because whenever I go into a trading day, I have a max limit of 2 losses. If I take 2 losses in a day, I'm done for that day. But I could take 1 loss and then come into the market again to see if 1, I was on the wrong side, or 2, if the price just wanted to sweep liquidity one more time and then go into my direction, which is exactly what happened today. So let's go into the charts, go over everything, and start top down. So let's move myself over a little bit here. And we're on a daily chart. We got NASDAQ on the left, ES in the middle, Dow Jones on the right. So as of right now, you can kind of see the daily candle print with a big wick down resting here on all 3 of the assets. We have the NASDAQ that cleared out all-time highs today, ES cleared out all-time highs, and the Dow Jones cleared these relative equal highs, but yet to take out the all-time highs objective point. But let's replay price, clear this day out, and kind of start from fresh. So moving in from this daily chart, let's go down to a 4-hour time frame and skip down to the time of when London came about. And then we also had the pre-New York open before that 8:15 news driver. All right, so coming into the day, here's our 4-hour chart. And this was the London candle close before going into the new 6 a.m. 4-hour candle. Now, I didn't have any sort of SMT relevant on the daily time frame at the lows, so I couldn't really frame anything there. So I had to adapt, drop down to a 4-hour chart, and look to see if there's anything relevant here. So on our 4-hour chart, we had these resting lows here. So I'm going to check these corresponding lows between the NASDAQ, the S&P 500, and the Dow Jones. Now, look carefully here. You can see that the Dow Jones actually took out that low, so that's an SMT between NASDAQ, ES, and YM right there. So that's our first indication of SMT resting here. So I marked this off going into the day, coming into New York session. And now, since we kind of had this, I wanted to see what was price looking like on the hourly chart moving from there. So if I go to the hourly chart, moving into New York session, you can see that London had a big drop overnight. Now, if we kind of frame, and I have the ideology of what is price doing on a daily candle formation, it's either an open low high close or an open high low close for a bearish day. Now, the open for the day, what did we do? We opened and just dropped lower. That was it. Open lower. There's no manipulation higher right now. There's none. All we had was an open low, creating an SMT during London. So what am I going to think going to the day? How is this daily candle potentially printing? Open, low, high, close. That's my mindset going into the day. I thought that longs were very easy read. Now this is 7 a.m. This is 5 a.m. Let's skip a couple hourly candles. Here's 6, 7, 8. Now, this 8 o'clock candle had high impact news, but what did it also do here? So we have this big down close candle at the open of London. What did this down close candle do? It cleared liquidity resting here. So this is a short-term low that price ran. We're creating an intermediate term low resting here. What is now here since we closed above at 7 o'clock? A bullish order block right here. Forever model. But I can't execute off of this because I didn't have anything relevant on the daily. So daily to 1 hour, that's not my execution model. I needed a daily SMT to come into place for that to be a label on. But we did have SMT on the 4 hour. We also did have a small SMT at these hourly candle lows here between the 2 a.m. and the 3 a.m. between Dow, ES, and YM. If you look and check the corresponding candle lows. That's just an extra piece of confluence. But during this hourly candle, we had a drop down into that hourly order block, and then price reacted off of it. Did the same thing on the S&P 500 here as well. Just like that, came into that same down close candle, tagged it, and reacted. Now, what we did from here on, I took my first execution on the 5-minute chart. So let's go to the 5-minute and look and see what happened during that high impact news driver at 8:15. So here is that hourly order block. Now let's play out price until we get just before 9:30, because 9:30 did some damage today. And also, I've been noticing the time from 9:30 until 10 o'clock has been a little bit difficult, but I'll get into that as we go on. So I'm going to skip price a little bit here right before 9:30. So here is 9:25, resting right here. All right, so 8:15 high impact news. We did have a little bit of a manipulation lower, but nothing of like actual substance. So I wanted to see what happened after 9:30 if we were going to sweep this low out and then go higher. So what happened actually is price swept the low and went higher, just like that. And we actually created an SMT at that 8:15 to 9:30 low. If you look, compare it to ES and NQ, higher low here. We look at the Dow Jones, higher low here. So in my eyes, I'm like, okay, cool. We're good to go. Price swept liquidity. 9:30 is now ready to distribute higher. I think that I can try and take a stab at a long. Even the next 5-minute candle, what did it do? It pushed and then created a fair value gap alongside of it. So I had this up close candle here, and I marked it off as a breaker with the fair value gap resting with it. So what did I do? I put a buy limit at the tag of that breaker block with the fair value gap. My stop loss went at the body low of that 9:30 candle, and all I wanted was a 1 to 2 risk to reward. The only thing for me that I should have kept more into a factor of is the fact that we already swept out the Asia highs resting here. But I didn't let that conflict me because this was enough displacement for me to take a trade. I thought that this was a manipulation to then distribute higher, and then the next 5-minute candle tags me in here, like literally would have been a bottom tick right at the tag of that order block and the fair value gap. So I thought I was good. We had a great 5-minute candle closure. What happens next? Death candle. I got smacked right here. So from this point on, I need to reevaluate what can potentially happen next. All right, so I clear off that chart. I clear off the breaker. I remove the SMT down here. I need to recoup myself, see what is price willing to do next. Are we going to go short? Are we going to go long? Is this just a liquidity sweep again to then go higher? Or is this a break of structure, creating a breaker to then go short and target London lows? So what do? I go to the 15-minute chart, and I know that price was trading within this 4-hour bearish fair value gap resting here. If we look closely, check the charts on YM running previous daily high, the NASDAQ and the S&P 500 failing to run the previous daily high. But if you look closely, look at this 4-hour candle and this 6 a.m. 4-hour candle. The closure closed off and inversed that 4-hour gap. On NQ, closed off, inversed the 4-hour gap on ES. I saw that and immediately knew longs were still in the play. Shorts would have been in the play if we respected in a body close within that gap. Because I know a lot of you guys took shorts from that 5 minute change in the state of delivery right here. But that did not work because once I saw that come into play, I was like, the only way that I could actually short this right now is if the 15-minute candle from 9:45 until 10 o'clock, if it closed below the candle from 9:30. That would have been a 4-hour to 15-minute change in the state of delivery for a bearish order block and a bearish forever model setup to then target lower prices. But since we just created a big wick, inversing that 4-hour gap, and then just sweeping out the lows again, going back to the 5-minute chart, this was not a sell. This was not a sell whatsoever. This was price engineering more liquidity, creating another SMT at the lows just like this, and then look at what happens next. Next 5-minute candle. What does it do? It pumps back up higher. We're still between the time of that 9:45 to 10 o'clock 15-minute candle formation. Next 5-minute candle tags this 5-minute bearish fair value gap. We don't have anything yet. 9:55 to 10 o'clock here. What do? We create a wick lower, create a inverse fair value gap on the 5-minute resting here. Holding this SMT for the 5-minute on the S&P 500 and the SMT on the Dow Jones. So I'm going to make this bigger and show you guys exactly what I did here. Since I took that initial loss, I was like, all right, cool. New 4-hour candle. I can now reevaluate this long and recognize the fact that price just wanted to clear liquidity out one more time and then go into my anticipated direction for higher prices. So what did I do? You guys know that I have 3 ways of executing price in the market. My 3 ways are inverse fair value gap, order block, breaker block. You could have done any of the 3 here, literally any of the 3. So this was my IFVG. So this is an IFVG here. I put a buy limit at the inverse fair value gap tag here. My stop loss went at the 10 o'clock 5-minute candle low. Why did it go there? Because if we are framing a 4-hour open low high close, this would be the low creating the wick of that 4-hour candle. And then I'm expecting price to expand higher. So I got in here with a 1 to 2 risk to reward. My first execution was a half risk play. And then my next execution I'll show you guys, we get tagged in here. So this is my first initial entry. And then I said to my Discord while I was trading live, if price tags us in or creates a 5-minute bullish order block from this down close candle that stopped us out at 9:45, I will add into my position. So this was a potential stack on here for a high probability bullish order block. Next 5-minute candle closes above that down close. Next 5-minute candle tags in right there, gives us a kiss and go. So I put in another buy limit here. I put in my stop loss at the low of the inverse fair value gap, and my target was just the resting highs all the way here at previous daily high, just like that. Simple, easy peasy process, just like this. And as you can see, price ends up floating and running right to the previous daily high as I described. My inverse fair value gap entry, my order block entry, both of them were there. And all I did in this case scenario was take my initial entry, it lined up properly, but price wanted to engineer more liquidity, sweep out longs one more time, and then it went to go to my initial ideology of higher prices. That is completely fine. I will not let one loss hold me up and stop me from going in again. If I'm wrong once, I can go in again for a second time, and that's exactly what I did here today. I left one more shot in the clip to fire off, and it ended up working. I made back my loss and more. And all I did was be patient and wait for price to give me an ideology as to what to do next. We didn't stay within that 4-hour bearish fair value gap. The 15-minute did not give me the change in the save delivery, and therefore longs were still in play. We created another SMT at the lows, and then we inversed that 5-minute gap, violation of the bearish PD array, long there, order block here, take us to previous daily high. Simple, easy process, and this sort of stuff repeats every single week. But I hope you guys learned something from the video. I hope that this was of value to you, and let me know if you guys want anything new in the upcoming videos besides trade breakdowns. But I figured that this one will be more valuable because I'm showcasing the loss and then how I adapted from that loss. So thank you guys all for watching. Like, comment, subscribe, and like always, I will see you guys in the next upload. Be safe, y'all. Deuces.